Okay, so welcome everyone to my channel. This is actually my first video. I'm gonna treat this channel as sort of a journal place holder. Not gonna do anything too crazy with this channel. Just gonna make it so as, my own personal journal on the internet, as well as share with maybe a small audience some of my thoughts. And YouTube has always been a dream of mine, so I'm gonna be kicking off a cool small YouTube channel. So if you guys like personal finance, investing, that sort of stuff, I'm going to talk about various things like that on my channel. And these are things I really am passionate about and like, and I'm going to be sharing it on my channel as we go. So without further ado, I want to jump right into the topic to talk a little bit about ASM. ASM, the beloved ASM of Malaysia, right? It's a government unit trust, and I'm going to be sharing why I think, personally, for my case, it's not a good idea to invest in ASM. And I'll list down several of my key points. And I know it's a very beloved unit trust, and I don't judge anyone for holding it. I think as long as you're investing, no matter what you invest in, as long as you don't keep it in the bank account, eroding under the inflation or the depreciation of the ringgit, then I think it's fine, right? No matter where you keep it. But personally, for my own scenarios, my own situation, I think I could do better elsewhere. And I'd just like to share it with you guys, right? So just a little bit of transparency. I do actually own some ASM, so I might be thinking of liquidating a little bit of it and slowly moving it into certain assets that I believe could perform a little bit better, as opposed to keeping it in ASM. Of course, remember, as I said at the start of the video, this is my opinion. This is meant to be a journal for myself. In the future, I might look at this video and ASM could be making 11%, 12%, like it's glory days again, and I could be laughing at myself, just like some of you guys who might be laughing at me right now as well. So, of course, this is for my own due diligence and tracking. I expect you guys to do your own due diligence as well whenever you do any sort of investing. Please do your own research. Everybody's situation is different. Your situation and my situation will not be the same. So please don't follow exactly what I say. Please just hear out my points, digest it a little bit, and let's, maybe have a debate, have a discussion in the comments. Right, let's jump right into the topic. Let's speak a little bit about what is ASM and what is ASNB for those who don't know. So ASNB is the, I would say, entity. ASM is one of the products within ASNB, and ASM is a fixed price product. So I'm going to break it down a little bit more for you. So ASNB, as I said, is an entity owned by the government and managed by this entity called Permodalan Nasional Berhad. I believe that's a government entity, so they are very much linked with the government. So it's a pretty safe place to put your money at, if that's the case, right? So ASM, I'm going to talk a little bit more about ASM. ASM is the unit trust fund that I was talking about. Targets lower risk investments. They target stable returns over long term. So that's their goal, right? The fund is made up of different things. So equities, fixed income securities, and cash equivalents. So now let's take a look a little bit more on ASM. So if I go here, of course you can see here, there is Bumiputra, there is Malaysia, and then there's variable price. I would recommend you to steer away from variable funds. However, as I said, not financial advice. Do your own due diligence. If you think it fits for your own personal goals, things like that, you can always come here and look. But you can see that their performance, I wouldn't say too bad, but it's nothing to write home about, right? And I believe their sales charge is pretty high. Yeah, there we go. That was pretty crazy, not gonna lie. But that is not what we're interested in. We're actually interested in the fixed price fund. And I'm going to be commenting a lot about ASM. The reason being, if you're Malaysian, of course, you know, we as Chinese or people who are not Bumiputra, we are not allowed to buy Bumiputra lots. Because if I could, I might reconsider what I'm claiming right now, correct? So if you see here, eligibility account dewasa, Malaysian Bumiputra is 18 and above. Yeah, so we can't buy these things, but you can see that their performance is not too shabby, right? Additional bonus, that's like a 5.25. Yeah, not too shabby. It's still hitting around the 5 mark, which is pretty impressive. But now coming back to ASM, this is the concerning part for me. 2023 actually was quite a pretty decent year for stocks. I mean, in terms of the performance, I actually have stocks in the US, I have stocks in Malaysia as well, and they perform relatively okay for 2023. And the jump from 2022 to 2023, I mean, this is not impressive at all. Actually, I can bring this website by my PT3, which illustrates it a little bit more further back. You can see that, yeah, the last time we managed to get 5.5% out of ASM was 2019. And it's steadily going down here, right? Now, I do expect it to reach 5% again, which is quite decent. However, I mean, for the scenario that I'm talking about, my personal scenario, I don't think it's that good. And now I'm going to talk a little bit about why I think it's not a good investment for me. Number one, it's, as I mentioned in ASM, very, very low risk. So as you know, low risk, low rewards. 4.0, 4.5, I can get pretty much in some FDs, and maybe, I mean, even your EPF is higher than this. So let's actually jump right quickly into this. If we check for FD alternatives in Malaysia, you can already see FSM1, very liquid, 3.64. Withdrawal period 2 days, no sales charge, expense ratio 0.4. Here, Penanga KDI recently also just listed 4.0 per annum, and you can withdraw it almost instantly. I tried it before, and it's pretty instant, you know, within 1-2 business days, right? No management fee, no expense ratio fees, etc., etc. Now, stash away simple, 4.1%, touch and go, 3.45. So as you can see, we even without investing and fighting over these limited funds that are available for ASM, we can get almost pretty similar performance just from money market funds. And money market funds are very, very safe. And this is my opinion as well. Yeah, you can see high liquidity, potential for higher yield, low entry requirement, convenience. However, of course, no protections, no guaranteed returns. Yeah. And I can talk a little bit more about how money market funds work, but this is not the whole point of the video. Go back here. As I was trying to sell, just testing it, I realized you can only sell 2,000 units per month. And I know this is the online. And I know ASM prides itself to be this, you know, very flexible saving. But is it really that flexible? I'm literally fighting to get in on ASM at one point. I think during 2019, 2018, I was literally fighting to get hold of ASM, calling my bank agent every day, just getting a hold of some units, right? And it creates this kind of like FOMO. I don't know if anyone else feels it, but it creates this kind of fear of missing out, and you buy more than you actually need to, right? And it's a low risk, low reward kind of scenario. do you want your money to only earn you 4%? Especially, you know, just being fully transparent, I'm only around my 20s right now. I want my money to do more than that. I know for every portfolio, you have to diversify. You have to have some low risk assets, medium risk assets, and high risk assets. I do have them, but I want my low risk assets to be pretty strong and not so difficult to buy in and buy out of. You know what I mean? It's sometimes a little bit hard to balance my portfolio, especially with ASM. Right? It's actually sometimes pretty crazy. So I wanna try to move my money into something I can buy in and buy out of more regularly. Of course, I am a long-term investor. However, I balance my portfolio quite often, meaning when I have profits and it goes over my allocated how should I say, percentage for that given asset class, I would trim it. I would trim it and move it to asset classes that perform a little bit less well. I can give a good example. You guys know about the cryptocurrency boom that is happening recently. That has gone way over my proportion that I feel safe about. So I was doing a lot of trimming. And those excess money, I'm moving to lower risk stuff, right? Because the market's a little bit, in my opinion, a little bit crazy right now. So I'm moving it into things like, you know, Malaysian stocks, Malaysian blue chip stocks. I'm moving things into like money market funds. I'm moving into gold, etc. Even gold is doing crazy right now. Exactly. But if I were to go back to the topic of ASM, as I said, I don't believe it's a good place to park my money because of just the sheer liquidity. It's so hard to buy in when I need to put my money in, and it's easy to sell. Yes, it's easy to sell, but 2000 and online, and other than that, I have to go to the kiosk. That's so, how should I say, not flexible, you know? I can sell my money market fund online and there's no limit. All right. It's kind of crazy. Yeah. So, yeah. Now I'm going to talk a little bit about the alternatives that you could go for. So you could go for EPFs. Just put your money in good old ETF, and they actually perform better than ASM. Actually, at one point, I know that ETF actually performed worse than ASM, and that's where the hype came about. But in recent years, if I am not mistaken, EPF actually performed better. And the only downside of EPF is that you have to wait till, I think it's 65 to withdraw everything. Yeah, about that age to withdraw. And yeah, that's pretty much the downside. And of course, you must know that ASM has to do some more riskier stuff to earn better rates as opposed to EPF in the past. And to think that PNB, with all due respect, can do better than EPF is not really believable. And they are so similar. They're both government entities. If one has the magic sauce and the other does not, doesn't make sense to me. They both pretty much share the same thing, and I think EPF is looked at a more higher regard than ASM to the government. Because if I mean, if the ASM fails, let's say worst case scenario, it fails, it's not as bad as the EPF failing, right? It's like your 401k failing in the US. It's crazy. It will bring the whole nation down, right? So EPF is significantly safer than ASM, and it actually performs better. So if you're not in a rush to use your money and you don't mind parking some money in there for the long run, why not just use EPF, right? Another thing is you can take a little bit more risk. You can go for the S&P 500 annually. I think it makes about 10%. conservatively, you could say it makes 8 to 9%, which is still significantly better than ASM. Not only that, you can buy in and buy out pretty easily, unlike ASM, right? So liquidity wise, I would say better, right? And also there are things like REITs, there are things like money market funds that I mentioned, and it's all very, very interesting, right? And if you can see from my tabs up above, you know what I actually am interested in putting my money into. So what I chose is to put my money into REITs, Malaysian REITs. I actually bought REITs before, and I actually did make some money on it. Although, I mean, it was all over the place. At one point, when I was starting to invest in the Malaysian stock market, I had banking stocks, I had REITs, I had healthcare, I had, it was all over the place. Then I wanted to like really segmentize my assets, you know, as I like to do it. I like my high risk assets, I like my medium risk assets, and I like my low risk assets to be separate. And within my low risk assets, I have like money market funds. I have things like fixed deposits. I have my Amanah Saham as well. Things like that. So I believe REITs, yes, they are dangerous. They are not fixed price, meaning that my capital is not guaranteed. One thing I forgot to say about the good thing about ASM, and I have to give them benefit for that, is that they guarantee payouts. If I'm not mistaken, they always pay out, and I don't think they even missed once. Right? They always pay out, and at least 4%, even during the COVID years. So that's very, very good. And your capital is guaranteed, so you don't have to fear that you lose money. Of course, I said that at my age, I'm willing to take a little bit more risk, and I do not want my money to be being hit by this opportunity cost of not probably taking a little bit more risk. And also, it really, really hurts when you see 4%, but the Malaysian ringgit depreciate like crazy against other currencies. You're technically not really earning any money on your investments, right, at that point. So I want to take a little bit more risk. I am willing to take a little bit more risk. And what is taking a little bit more risk for me? It's REITs. And REITs is structured in a way where dividend payouts are mandatory, and dividend payouts are given based on a percentage of the company's earnings, right? There are many, many REITs in Malaysia. I actually did a pretty cool spreadsheet here. All data is provided by the fifth person. I'll just go through it really quickly and what I'm planning to actually get, right? So these are all of the REITs that I actually took a look at. Go through them very quickly. YTL, they do premium hotels. IGB, they do gardens, mid-valley shopping centers, a la carte. KPJ, KIP, they have low-cost retail sites, commercial units, and industrial. KLCC, the very, very famous KLCC, commercial and office. Atrium, industrial, Sunway, retail, education, office, industrial, hotel. They are just crazy everywhere. Axis, actually worked in one of their offices before. So offices and industrial. Pavilion, retail and office. So things I really pay attention for here is the net asset value. So basically very simple. If the net asset value is above the price, it's, to me, pretty no-brainer to buy it, right? Your net asset value above the price, that means your overall assets is worth more than the price of the stock right now. So to me, I would be very interested in getting these stocks. You have the distribution yield, the property yield. So if the property yield is above the distribution yield, I believe they have more leeway to distribute more in the future, right? I mean, that kind of makes sense. If your property yield is high, you have more, basically 3% worth of cash to play around with invest back or pay out as more dividends, bonus, etc., etc. And we have PB ratio basically below 1, I believe it's good. And then there's gearing. Anything below 50% to me is pretty good. And of course, 40% is leaning more towards the upper side. However, big companies like YTL, a la car, KIP, I believe they get paid off pretty simply, right? So yeah, actually, right now I'm looking very, very much into YTL and KIP. I really believe in the sectors they operate in. I believe the hotel is gonna recover. People are traveling a lot more now. I believe as the economy recovers, people will travel even more. I think YTL is performing pretty well, even though we're kind of like, I don't know what we're in, but I feel like we're kind of in semi-recession. But yeah, premium hotels. And then there is KIP, low cost retail, industrial as well. So these are the two REITs that I'm actually looking into. And you can see all of the REITs here, right? And you can see the trailing 12 months. All right, so just rounding things up for everyone, right? I spoke a lot about ASM, why I'm not too big of a fan about it. I know since it's my first video, please give me some rope. I might not be the best at articulating my points at the given moment. My points could be all over the place. So at the end of every video, every journal, I'm gonna give a quick roundup. So my main talking points are why I'm reducing my ASM stake and why I think it might not be worth it for my scenario. And please hear me out and do take this as sort of some debate points, but not financial advice. And just keep an open mind about it, okay? So why I'm reducing my ASM stake, it's hard to manage, not very flexible, as I said. When I buy in, my agent says, buy more lah, buy more, these ASM units don't come up every day and I buy in more than I actually want to. And selling is very easy, but sometimes if I want to sell more than 2,000 ringgit, I have to go to the actual brick and mortar shop, right? Doesn't make any sense. Performance, not very great. I know over the past few years we had, COVID, we had all those things, but it's no excuse to be performing worse than the EPF and very, very similar to money markets funds, right? And it's super, super low risk. I know it's super low risk because of the prospectus. And I don't know, is it even worth it to keep your money in there? Why not I just put it in the money market fund at that point, right? So I'm looking at somewhere I can park my money in, where I still take low risk, significantly lower risk than my medium risk assets, but I still want to make potentially more income. So slightly in the middle between low risk and medium risk, so medium low risk, I would say. So that's why I chose REITs. And why I chose REITs is I want some exposure to mega real estates. So REITs within Malaysia, they actually own real estates all over the world. So YTL, for example, they own some hotels in, if I'm not mistaken, Japan. They own some in Australia and the US, if I'm not mistaken. And also, for example, KIP REIT, they have a very, very strong reach in the middle lower income groups where they have retail stores and industrial factories as well, right? So they're pretty consistent with that. I believe in stable income. So REITs is very, very good at ensuring stable income. And there could be potential for capital gain. So you could even earn more from that front. Of course, I know that more risk leads to bigger losses, but also could lead to more rewards. And the reason why I want to take a little bit more risk than the ASM is, as I said, I'm super young. I hope I have a long investing journey ahead of me. And I have a longer horizon just in general. So I'm willing to take more risk, and I believe moving some of the funds from ASM to REITs could be a good choice in my given scenario, right? Um, Last but not least, it's easier to control and trim positions or buy in if needed, right? It's not like ASM where you have to fight for units, and when you sell, you can only sell 2,000, or if you have to go to the brick and mortar store. So, I mean, those are my points. Let me know what you guys think in the comments below. Of course, not financial advice. I think I said it like already 5 times in this video. So please take my words with a grain of salt. If you disagree with me, by all means, I do take disagreement. And I would like to hear what you guys think, right? I could be talking gibberish. Of course, this is my own personal journal, so I don't expect anyone to take too much away from what I just said, but this is what I plan to do for my own portfolio. I hope you guys like this video. I'll be thinking of what I want to post in my next one, and no, I'll see you guys soon. Thank you for watching. Ciao.